What's up everybody? Welcome to the Stocks channel. My name is Corey and today we're going to look at weekly charts of all of the indices, the VIX and Bitcoin, and we are going to continue to explain why the bull market is starting and why the bear market is now over. First up, let's take a look at a weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Alright, so we can see we had another very strong week and we did get a very impulsive weekly candle closing at the high of the week, and this is an extremely bullish candle. And remember, based on the study that I just did in yesterday's episode that said the bear market is now over, you can see that we had a decisive close above that level, and I am labeling that level entered the bull market phase, so you do not forget where that level is at. And remember, I do have the average drawdown from the signal date, which is now also going to be on the chart as the average drawdown from the date of the signal. So just looking at the data that I compiled from that study, and if you haven't seen the video, I just posted it yesterday and it's called Bear Market is Over. I do suggest you watch that video to fully understand how I derived this data. But you can see based on the chart that we are only expecting an average drawdown of about 5%. And looking forward, we can expect an average gain over the next 6 months of about 11% and an average gain of about 21% over the next 12 months. So keep in mind that is a very favorable risk reward at this point in time. In theory, if this does repeat, we are only looking at a 5% drawdown from Friday's close for the potential to make about 20% over the next 12 months. Now next, I'm going to post a completely different study that was done by somebody other than myself, and you could see his Twitter handle in the bottom right of the screen is Jonathan Harrier, and he also did a study that suggests the bear market is over, even though he used a completely different method. You could see his method in the top of the screen when 2 of the past 3 days shows SPX advancing volume greater than 90% while below the 200-day moving average. Looking forward, you only had about an average drawdown of 5.1%, with an average 1-year gain of 19.3%. Keep in mind, these are extremely similar numbers to what I just showed you from my study, even though we are using 2 completely different methods to draw the same conclusions. So keep in mind, when I tell you the bear market is over, even though I am the one presenting the information to you, it is not my opinion. These are objective facts. I went back 35 years of data to complete my study, and you can see based on his chart, he also went back to 1985. And to make this even more compelling, I am going to do one more back test for you, and we are going to quickly switch over to the SPX, and we are now looking at 1970 because somebody did comment that I should look at the 1970 bear market and use the same exact back test method to see if back in 1970 this was also the case. So we will do that very quickly here, and if you don't know the rules of the backtest, you need to go watch that other video because it is very important to understand how I drew these conclusions. So you can see back in 1970 when we entered the bear market, so we are now going to take our retracement tool and we are going to find the bottom of the bear market where we actually started to retrace 50%, which you could see was not until we hit the absolute rock bottom. And by the time we retraced greater than 50%, there was no additional drawdowns and we just continued to run away without looking back. So this back test now looks back 50 years when we include 1970, and we get the same exact result that the bear market was over by the time we met the criteria that I laid out in the video for the back test. So if you continue to think that I'm just a permabull who does not want the market to ever go down again, you couldn't be farther from the truth. This is very compelling data from 35 to 50 years ago where this signal has never failed. I will take those odds any day of the week because if this signal fails this time around, at least I know I was in the side of the trade that was heavily favored and had the best odds and the best risk reward setup. I do not care if we get a black swan event and we slice down through critical support because I will instantly get more risk off and I will instantly get more bearish if the chart tells me to. You can see here on the Stocks channel Discord that I teach this method of following price action, and you can very clearly tell from this chart that I said while SPY was above 369, we are trending towards 401 and then 420, and we never actually broke down through that risk level that told us we needed to stay on the bull. So we have been bullish in the Stocks channel Discord, almost what feels like the bottom of the bear market because we knew when to get bullish by looking at price action. Now, of course, we did have a contingency plan if price action told us otherwise. If we saw SPY below 390 and breaking below that support at 369, we were instantly going to get more risk off or even short the market down to the next price targets of 350 and then 338. But as you can tell, that is not what happened. and we manage our risk around that level at support at SPY 369. And this is the process that I teach of following price action on the Stocks Channel Discord. And this is why if you are only listening to what I tell you in the videos, you are missing out on a major part of the process of how I trade this market and how I follow price action. So I continue to tell you, if you want to up your trading game and you want to get better at managing risk, you need to get in the Stocks Channel Discord and you need to start learning how to follow price action. Also, please remember to like and share these videos to spread awareness, because I am spending a lot of extra time going from a lot of data back 35 to 50 years ago to really hammer home the point and help retail stop being so bearish, because we are heading back into another bull cycle. Do not let your families and friends short this entire bull market higher, because you have to remember that a lot of these retail traders and investors just started trading in 2020 and they have never been through a bear market. And now that they've seen a bear market, they are scared and they are only looking in the rearview mirror, and they have a lot of recency bias that there is no way the stock market can ever go higher again. And if you look at the stock market psychology of cycles, we are still in the phase of disbelief, which means retail is going to stay bearish the entire way higher, because you have to remember in the previous bear market of 2008, retail did not have access to shorting, and now that retail can easily just buy 3x inverse ETFs, they are more than likely going to lose a lot of money during the next bull market, because they are going to short the entire bull market. And back in 2008 and 2009, they did not have access to those inverse ETFs. So by liking and sharing this video, you are helping your family and friends not lose money, because I just showed you 35 to 50 years of data that implies we are going back into a bull market. If for some reason a black swan event comes out of nowhere and starts taking this market down, we are instantly going to manage our risk below critical support, so you do not need to live in fear. Learn to manage risk and learn to trade in the direction of the trend, and you will not live in fear while trading in this market. The only people living in fear are the people over leveraging and have no trade plan and have no idea when they should switch from bullish to bearish. So they are just going to stay bearish because that's all they know, and that is all they've seen for the past 7 months. So it is very important, if you understand the information that I'm presenting, that you help those around you also understand what is going on in the market, because there is a lot of noise around us right now, and that noise is going to cause a lot of people to lose money. So please understand, the reason I am trying to hammer this point home is to help people not get hurt during this bull market, because there is the possibility that this is a very impulsive bull rally, because there is going to be a lot of short squeezing, which could make this thing very impulsive. All right, so now let's move on to the charts, and I will be moving quickly because I did spend a lot of time in the beginning of the video going over very important information. So looking at the technical analysis of the weekly charts, we need to understand this is a very impulsive bull rally, and we are breaking out to higher highs after making higher lows, so we do have the structure of a bull trend. So in the SPX, manage your risk around 42.28, and on SPY that's going to be around $421. And you can also manage your risk around this critical breakout zone right around 41.58, and on SPY that's right around 416. So remember, I told you, as long as you're managing your risk, you do not need to live in fear. And please do not forget that the average drawdown is still 5% away from Friday's close. So while there is no guarantee that we are going for the average drawdown, as I did have 2 examples where once we broke above the signal level, we just continued to run higher. But there is the possibility we will get the average drawdown, or possibly even more, to retest the breakout. So do keep in mind, it is possible that SPY goes all the way back down to $400 before going any higher. Now we have no way to know when and if we are going down to 400, and that is why trading is always about managing risk. But it is important to know that in a bull structure, once we do have that drawdown, we will instantly be looking for a continuation of the rally, which means we'll be looking for the next higher high after we put in the higher low. So keep in mind, a bull market does not mean that we just go up in a straight line forever. There are obviously going to be pullbacks, and there are always going to be buying opportunities right around the corner. So if you miss this rally, you do not need to just FOMO in because I'm saying we're going back into a bull market. You just need to build a trade plan that is around buying the dips off support as long as we're in a bull trend. Remember, these are the things I teach you in the Stocks Channel Discord. So if you need help managing risk or how to set up trade plans, you need to get in the Discord server, because I don't have the time to fully explain it every single time I make a video update. So just keep in mind, this is the structure and the path we are expecting to finish out the year. We are expecting higher lows and higher highs. manage your risk around the levels that I just gave you, and understand the average market drawdown from the date of the signal is still about 5% lower. On the NDX weekly chart, we can see the NASDAQ 100 is also looking extremely strong, and we did get that decisive breakout above our double resistance levels, which was at 13,307, and our resistance trend line that defines the bear market. So these are very bullish breakouts on very bullish weekly candles. And remember, weekly charts are going to be very important because a lot of institutional money was waiting for the weekly charts to get bullish. And now that we are getting bull trends on the weekly charts, there's going to be some serious money flowing into the market. And that is why during the backtested studies, you're seeing very muted drawdowns of nearly 5% or less, because that big money is going to start piling in on any dip from here, and that is going to make the short squeeze and the bull rally even more impulsive. Remember, I'm speaking facts here, so if you're having trouble understanding that these are real things going on in the market, you need to check your bias at the door, and you need to review all of the objective data that I've been supplying, because this is an extremely impulsive bull rally that you do not want to short. On the NDX, manage your risk around 13,307 and down here right around 12,950. Because those are going to be your critical support levels in the event we get a pullback. In the Dow Jones weekly chart, you can see again another very bullish breakthrough with that very strong weekly close above that resistance at 33,272, and we are getting very close in the Dow Jones to breaking the resistance trend line, which we already did break in the SPX and the NDX, so it's very likely the Dow Jones is just lagging behind. Again, these are extremely bullish weekly charts, so please don't ignore that. And on the Dow Jones, you want to manage your risk right around 33,272 or down here right around the support of 33,000. So you have very well-defined risk in this bull market, and you know your average drawdowns from the back-tested data. So just build a trade plan around all of this information, and do remember you want to stay bullish while we have the bull trend. On the Russell 2000 weekly chart, we also have an extremely bullish weekly chart, and we're now 2 weeks above the critical breakout at 1889, and we did break yet again another resistance level at 1968, which means we're more than likely well on our way to the next resistance at 2100. In the Russell 2000, manage your risk around 1968 and the breakout level of 1889. And stay bullish as long as we are above the breakout in the strong bull trend. On the VIX weekly chart, you can see the VIX continues to crush, and the VIX now has a weekly close below 20. So we are seeing fear completely leave the market, which is the only way the VIX gets down below 20. If fear returns to the market, we would expect to see a spike in the VIX. So as long as the VIX is below 20, you will want to stay bullish. And if the VIX starts spiking back above 24, you can get a lot more cautious. But right now, it's very clear the VIX is trending lower, and the next downside price target in the VIX would be right around 18. On Bitcoin's weekly chart, we are currently above that resistance level on the daily chart at 24,000, and it looks very likely that we're trending up to the resistance trend line, which is right around 27 to 28,000. And you can see we are starting to see some buying volume picking up. So Bitcoin is looking bearish as long as it's below the resistance trend line, but I do expect to see a test of that trend line. And if we get rejected from that resistance, then we could start thinking about the next leg lower, which will dig us back down for the retest at 19,000. And below 19,000, we would be looking for a price target at 12,000. However, I'm in the camp that Bitcoin is going to break through this resistance at 27,000 and come back up to retest this resistance right around 32,000. If we can get Bitcoin back over 32,000, it will likely join the rest of the market with the bull trends. But right now, we still need to respect the fact that Bitcoin is in a bear trend, and it is still making lower highs and lower lows. On the ARKK weekly chart, we can see we are still below our support trend line, but we are getting that bull breakout and weekly closes above that level at 48. And we are now 2 weeks back over the weekly 20 simple moving average, and we're very close to breaking back above the support trend line. So the ARK ETF will be looking a lot more bullish once it starts getting weekly closes above 53. And you can clearly see we are getting a lot of consolidation down near this low, which could have been a lot of money accumulating near the bottom. And we could be going right back into a bull market in the ARK ETF as well. So jumping back over to the S&P 500, the weekly charts across the board are looking very bullish, and we could even be seeing the ARK ETF, which is a very risk-on ETF, and Bitcoin, which is a very risk-on asset, also joining the bull market very soon. When you get an everything rally, that is a very good indication that it is the real deal bull rally, and we are continuing to see more and more assets joining the bull rally and getting the breakouts and starting to build the bull trends. When you combine that with all of the back-tested data that I've showed you, you can understand this is not my opinion. These are objective facts, and while we cannot guarantee that they repeat in the future, we know we have damn good odds with great risk-reward setups, so we are going to take those every single day of the week. So please remember to like and share these videos because there is so much important information in these episodes that I am giving to you completely for free because I want you to share it with your friends and family, and I want you to go help them out understand why they need to stop being so bearish, because if they remain bearish for much longer, they are going to lose a lot of money. And nobody wants to see your friend or family losing money just because there's all of this noise around us that is fundamentally making them bearish. You need to understand the stock market is not the economy, and we need to trade the stock market with what the chart is telling us. And right now, the chart is telling us to be bullish. I also have two services that I offer, and Bank Trade Alerts is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. And even in the bear market of 2008, it beat the market and had a very positive return. I also have the Stocks Channel Discord where I give you all of my intraday updates and analysis and give you new trade ideas weekly. So if you're interested in joining the Stocks Channel Trading Discord community or subscribing to Bank Trade Alerts, all of the links on how to join will be in the description below this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.